guys. Stick with me until the end of this video, and I will show you two undervalued stocks you should be buying right now. So first up on the list here is Amazon, and they've been lacking when compared to the Mag 7. Year to date, they're actually down 1.59%. If you even look at it from a multiple perspective of, enterprise value to operating cash flow, you can see the trend line here of the median over time, and it's at its lowest point in over 8+ years for an absolute powerhouse of a stock that is catapulting its way into two of the biggest mega trends in tech being robotics and cloud. Ackman has shared some interesting thoughts, and I just wanted to share it to you. I'll read this line. Currently, only 20% of IT workloads are estimated to be hosted in the cloud. That percentage is expected to steadily grow and actually invert over time, meaning there will be more people using the cloud than not using the cloud. Taking a look to some of Amazon's reoccurring revenue to show, really showcase their strong fundamentals. If you look back quarterly from December 19th to June 2025, they've been growing their, AWS recurring revenue by 22.8% annually. So, how does Amazon stack up against the competition? Let's take a look at Google for an example. AWS's backlog is almost twice as big as Google's cloud. AWS is about 195 billion for Q2 2025, while Google is at about 110 billion in Q2 2025. Walmart has been the largest company in terms of revenue for some time, since 2014 actually, and Amazon is about to dethrone them, yet their stock price doesn't reflect this reality, and as seen priorly, is trading at one of its lowest multiples historically. I'm pretty confident it could reach a price target of $280. Next here on the list is Shift4 Payments. So this slide's going to be a little longer, but stick with me here because this is a pretty interesting opportunity. Shift4 is a leading provider of software and payment processing solutions. They're based in the US and they're a leader based on the total volume of payments processed annually. They operate in multiple industries, as you can see below: restaurants, hotels, sports and entertainment, as well as others. The company generates over 100 million from subscription revenue. 90% of the revenue comes from processing payment fees. If you know and have been in the restaurant industry, it stinks when you have to deal with multiple companies. It could be a nightmare. Shift4 really ties it up for us in a pretty bow. They offer everything together, from inventory management to table management, payments, and even kitchen orders. The new Tesla restaurants, the diners, are even using their system. And I bet you'll see more venues using Shift4. Just remember too, it's pretty cool. Every time someone pays, Shift4 is making money. The founder of Shift4 is Jarrett Isaacman. And the reason I'm bringing this up is because there's Harvard Business Review studies that show founder-led companies tend to outperform non-founder-led companies over time. Look it up, it's pretty interesting. Um, Insiders sell for a lot of reasons, as you can see here. We have a sale here, here, and here. Nominal values not all that high, but again, you can sell for a variety of reasons. You're only buying for one reason. And not only is it someone, it's a random individual here, it's the founder and the CEO with his largest purchase ever of over $16 million in the company. I mean, if that's not the vote of confidence you not need to see, if you don't believe in the tech, you don't like the financials, which they're both stunning in my opinion. I mean, what a vote of confidence here from the founder. So here I just did the, max return here all time for Shift 4, ticker 4. Right now it's returned about 136% all time and is trading at $79.14. I think it easily has 100% upside from here, most likely more. I have another video here you can check out where we do a deeper dive into it and look at it from a discounted cash flow perspective and break it down. And you can see my price target in that video. That's it all for this time. See you guys next time.